Hello, everyone, and welcome back to the J22 Report. I'm your host, Johnnie Market. You all know that drill. Smash that like button, subscribe if you haven't. And just a disclaimer, nothing should be construed as financial investment advice. You can read more below. And yeah, sorry, I haven't done a video in a couple of days because my personal life, I had a lot of things to take care of. I'm going to do one today, though, so. Anyway, let's get into it. I'm going to catch up on the economic data. So anyway, you look at it, home price index that was up on Tuesday, up and of course up 4%. But if you look at the S&P Case-Shiller on a month over month, that's down 1%. And we went over it in a video, and this is multiple months, even though it's a small, it's still coming down. Consumer confidence way below expectations, 98.3. Let's see, I can show you. Let's look at this article. Consumer confidence plunge most in nearly 4 years as inflation fears. Now they say tariffs, but it is just inflation. If you listen to this channel, I said in the last couple of months, we're gonna see really uh bad inflation. Significant drop from January's revised 105. So you can tell sentiment is really bad, and if you believe sentiment drives markets, that's not, Richmond manufacturing, that was sort of positive, Dallas Federal. So you can tell with the sentiment and this S&P, it's sort of a mixed bag. But if you look at the markets, it's been doing poorly. But let's look at Wednesday's data. Building permits down 6%, way below expectations. New home sales were horrendous. 0.65, way below the 0.68. And then today, durable goods orders, those were up. GDP 2.3, but initial jobless claims, those are skyrocketing 242 over 221. Core PCE 2.7% over, that comes in more than expected. So that will drive up interest rates. So, and of course, the pending home sales, negative 4.6%, negative 5.2 year over year. Kansas City manufacturing and composite, that's negative. So you look at this is really, really bad economic data. And if you look at this, the Dow Jones, that was down 193, the S&P 94. And just looking at this, we'll go to the S&P first. Let's do a 5-day. Let's see, this is February 24th. Trying to find, that's a Monday. You look at it, it's 6,000. That has really gone down. And now it's around 5,861. So that's down 200 points this week. The market is really not doing well. Dow Jones, let's see how this has been doing. Now, I did say the 24th. It's sort of been choppy, but now it's coming down. And if you look at the 1 day, see this line here is, and you can show the Dow was positive for most of the day. And then around 11, when the data sort of fully digest, it started coming down, but it was still positive. And then toward around 2:30, that's when it dipped in the negative and closed below. And that is bear market behavior. If you look at what happens so far in the 5 days, the Dow Jones is down 500 points, 574, 1.13%. The S&P, that's down 3.8%, so down way more. And let's look at the S&P. That actually started in the positive too. And then same time around 11, it was when all the data was fully digested, it started coming down. And I think the inflation numbers with the interest rates really did a number. So we're starting to see this is bear market behavior. And as I said, this is a trading market now. I've said this many times on my channel. If you look at it, this is a market, if you can make it in a day or 5 days, go up, but this is not an investing market anymore. We're almost done. If not already, we could already be done. But the bull market that started in 2009 is almost over. And if it's not almost over, meaning it has one more year, it's basically over. I'm not really all that bullish. Gold had a bad day, and I think the interest rates came in. Uh, and who knows? Maybe this is Avi Gilbert talks about like that 5 month correction. Maybe this is it. I think I think it's gonna eventually break 3,000. But right now, where is gold? Let's see what's the price. It had a down day. It had an up and down day so far. Down, this is after hours, so none of this matters. I'm still trying to find, yeah, why can't Kiko just have the prices right away? No one goes for that. So yes, 2876. Who knows? Maybe it goes down to 2,800 or maybe it goes up, but I'm still bullish on, I think 3,000 is going to hit. Uh, but yeah, gold, I mean, all the uncertainty will fuel it. And then if you actually look at this, Bitcoin, right now, that's about, as I'm looking at this trades all the nights. So right now it's up 80,000. And really, it's really not doing well. 5 day, whew, it's going, as you can see, it's going with the stock market. And let's say 3 months ago, so around November, it was around 98,000. And I just want to take a bit victory lap because 3 months ago, so it was around, just November slash, I forget the exact day, November 24th. I did a video, The Hard Truth About Bitcoin. And, I was saying that it could go up more, but same thing with the stock market. Now is when you could really, oh yeah, there's a disclaimer. Now is not the time to invest. If anything, it's the time to sell. Got some hate. See tons of people bashing. Everyone, should buy it, so or should have bought it. So people did not like, and I was gonna say that's a perfect example of what tops like. If you've been buying Bitcoin and you've been in for 10 years and you love it, people don't like to hear sometimes, the party is over. And I mean, if it's not over with Bitcoin, it's almost over. But I mean, some of these crashes, though, people will say it's common. It's common until it's not. Now, it could go down to 79 or 60 and then make another run to 120 or whatnot. But you have to remember, year to date, look at this, year to date now. It's down 14% year to date. So if you were watching this channel, you knew that wasn't a good time to buy. And here's another investing lesson. Some of the best people at calling tops are people who aren't bulls to begin with, number one, or sometimes the best people, they're not people who can call bottoms well or runs well, meaning runs, but they can call tops great. So look, a year or 1 year, it's only 27%. If you look at it, almost all of that came in 1 month. Like almost all that gain. It's come in 1 month. So look at that down. That's a downward symbol, but oh my gosh, is Bitcoin really 79,000 as I'm doing this? So yeah, if you look at it, Bitcoin, I'm gonna try Bitcoin. I'm gonna try to do Google. See, this says 80, that Google said 79. Just Google Bitcoin price. So now it's 80,000, but let's see this. This is futures. Yeah, Bitcoin price 79,000. So, if you listen to this channel, unlike a lot of people, I have been, I've been through bear markets. I was in the gold, silver, uh, bull market for 2011. I know what they look like. Most people do not, and most people haven't learned from it. When you hear all sorts of insane things like put Bitcoin in the treasury, that's a sign of a top. So, the other thing, just want to get into quick, Washington, D.C. recession has begun. They're laying people off. Jobless claims has doubled. Now, this is where it's bad for the economy in terms of the markets because there's a lot of those houses in DC very expensive and they have a lot of mortgages. People lose their jobs. If they have to default on their mortgage or can't pay it, that's going to hurt the banks. This is an area where people thought, housing could never go down. All it does is just keep going up. So a lot of speculation is in there, not just the government workers. A lot of speculators, a lot of buildup has been in there. This will really put a damper on the markets once it's actually realized. And this could be the reason why the market's selling. Let's just go back to Bitcoin. Bitcoin. So, got a lot of hate for my call and 79,000. So, if you don't like it, sometimes you might want to listen to it because sometimes the best truths you need to learn are ones you don't like to hear. So let's get back to Bitcoin again. Sorry, I am taking a victory lap on Bitcoin. It's at 80,000 now. And this is another thing that's really, they think they can avoid the commercial real estate bubble. And the problem will cause this financial system by putting people back to work in the office. But look at this. U.S. serious delinquencies on auto loans are skyrocketing. More evidence the majority of U.S. consumers are struggling. This is February 25th. U.S. auto loans delinquency rates hit 3%, the highest in 14 years. I think I've already talked about this. So, yeah, I think I've already did. But yeah, this is something for whatever reason it came, but auto loans, this is a problem. And the thing is, everyone has to travel to get to work. Their gas bills up a lot more, and if they aren't taking gas, if they're not driving and they're taking public transit, then they have to pay for that unless they have a stipend, which most works probably don't have a stipend. So, and not only that, instead of, just having lunch at home, let's be honest, a lot of people you forget lunch and you have to go to work, you buy lunch. Lunch is not cheap. So credit card debt goes up. I don't even know if many people have transportation stipends at work. I didn't have one. So, yeah, they have to spend money on gas and they'll forget lunch. They'll spend more money on food. So, credit card loans and the auto loans, and that's going to hurt the banking system as much as the commercial. So, it'll be interesting. The elites see the commercial real estate problem, but they don't see the auto and the credit card loans. So, anyway, that's all. Hit that like button, subscribe if you already haven't, and remember the disclaimer, and we'll see what happens next.